And I heard a lot of people said if interest rate goes up, that will actually be good to the banks, since they can charge more and to make more money by lending. Which
that's right. That's right.
They are traditional function.
They borrow short, they lend long, they make more money.
Do you think
plus a lot of the financial companies own portfolios of securities that also will benefit from a rise in interest rates. So financials has been, for a very long time, one of, if not my favorite sector.
Our consumer sector, we saw a lot of good, like consumer confidence number and the retail number, but the consumer sector has been bullish for a while. Do you think they still have potential in the second half of the year?
You know, I think that for years and years and years, I've seen people talking about how the consumer is going to be tapped out and how the consumer is going to have to pull back at some point. It's never happened except when we had a major financial crisis. And if people have jobs, they spend. Americans spend. So I don't think that's an issue. The consumer sector is 70% of the economy. So I think that's going to continue. I think it's going to be fine.
I heard people discuss about how money are actually flowing into gold, and especially gold mining related stocks.
Yeah.
What's your opinion?
Well, gold is in a bear market. It tried to bottom 3 or 4 weeks ago, and it tested that bottom again, I think, last week. So now it's rising up and it's testing its resistance. So there's resistance on gold itself, just a little bit higher. Now, when trying to take advantage of moves in gold, there's two ways of doing it. Number one is to buy gold or the gold ETF, which like GLD is one of them. The other way is to buy gold companies, gold mining companies, which there's two ETFs, exchange traded funds. GDX, which is the larger mining companies, and GDXJ, which is the smaller. It's GDXJ is for junior. So when you catch it right, the companies themselves move faster than the metal. That's because they have what we call operating leverage, which simply means if gold was to go from 1,000 to 2,000, that's 1,000 points, well, you've doubled your money. But if it costs $500 for the gold miner to get it out, at 1,000, he's making $500. At 2,000, he's making $1,500. He's tripled his profits compared to gold itself doubling. So that's why they have more leverage in there. It can work both ways. When gold is bad, those companies do worse than the price of the metal. When gold is good, they frequently do better. So I like to blend the two, but for aggressive people looking to take advantage of an appreciation in gold, if it gets out of this bear market, then buying the mining companies can be a very good way to do it.
很高兴在这里呢听到他对于目前呢股票市场的一些分析，以及对于呢在下半年以及在6月份的市场交易的一些重点的一些看法。感谢各位的收看，我是陈一佳，在纳斯达克，我们稍后再会。